Some people see the future. They're not psychics, they don't have a crystal ball, they just see the patterns that everyone else ignores. They see the cracks in the foundation, while everyone else is admiring the view from the penthouse. In 2008, that man was Michael Burry, the eccentric, one-eyed hedge fund manager who sifted through thousands of pages of mind-numbing mortgage data and saw the truth. The entire global financial system was a house of cards, built on a foundation of lies. He bet against the housing market. Everyone said he was insane, his investors revolted. Wall Street laughed at him, and then he made them all pay. He made over $100 million for himself and $700 million for his investors by being the only one with the courage to see the obvious. For the past decade, the world has been asking one question: what is Michael Burry seeing now? His trades are analyzed, his cryptic tweets are dissected. Because when the man who predicted the apocalypse starts making moves, you pay attention. And just last week, in a series of quiet, almost unnoticed regulatory filings, he gave us the answer. Michael Burry has just sold almost his entire stock portfolio, over 98% of it, all of it, gone, and he has moved a significant portion of that capital into one single ancient asset: gold. This isn't a small adjustment. This isn't rebalancing. This is a man screaming, "Fire!" in a crowded theater. He knows what's coming, and if you don't listen, you're going to get burned, again. To understand the magnitude of this move, you have to understand how Michael Burry thinks. He is not a market timer, he is a risk assessor. He looks for what he calls the big, fat pitch. The one trade where the upside is massive and the downside is protected. In 2008, that trade was shorting subprime mortgages. In 2023, his filings show us that trade is long gold and short everything else. Let's look at the evidence. His fund, Scion Asset Management, filed its latest 13F report with the SEC. These filings show the public what a fund owns at the end of a quarter. In the first quarter, Burry was buying regional banks thinking the crisis was contained. He was buying Chinese tech stocks, thinking the reopening would spur growth. By the end of the second quarter, it was a bloodbath. He dumped it all. His positions in First Republic Bank, PacWest Bancorp, Wells Fargo, gone. His bullish bets on Alibaba and JD.com liquidated. He sold everything. His only significant holdings left are in the GEO Group, a private prison operator, and a massive position in the Sprott Physical Gold Trust. Why? Why would the man who saw 2008 coming liquidate his entire portfolio in the middle of a supposed market recovery? Because he sees that this isn't a recovery. It's the biggest bull trap in history. He sees the same patterns he saw 15 years ago, but this time they're on a much, much larger scale. Pattern number 1. The denial of inflation. In the mid-2000s, the Federal Reserve under Alan Greenspan insisted that inflation was contained. They ignored the soaring price of houses, calling it a regional bubble. Today, under Jerome Powell, the Fed insists that inflation is transitory and now cooling. They are ignoring the fact that while the rate of inflation may be slowing, prices are not coming down. They are just rising slower. Your cost of living has been permanently re-rated higher. Burry knows that this sticky, persistent inflation will force the Fed's hand. Pattern number 2. The debt saturation. In 2008, the crisis was triggered by household mortgage debt. Today, the debt is everywhere. Household debt is at a record high, corporate debt is at a record high, and most importantly, government debt is at a catastrophic, world-ending high of over $34 trillion. The system is saturated. It can no longer handle higher interest rates. Burry knows that the Fed cannot and will not truly fight inflation, because to do so would be to bankrupt the United States government. They will have to choose between saving the bond market and saving the dollar. And they will always choose the bond market. That means the printing presses are coming back. And not in a small way. Pattern number 3. The geopolitical shift. This is the new element, the one that makes this crisis potentially far worse than 2008. Back then, the world responded by printing dollars and flooding the system with liquidity. It worked because the world still had faith in the US. Dollar as the ultimate safe haven. China, Japan, and Europe all bought US debt. Today that faith is shattered. As we've discussed, the BRICS nations are actively, openly building an alternative system. China is dumping US treasuries, not buying them. The world no longer trusts the US to be the responsible steward of the global reserve currency. So when this crisis hits, and the Fed is forced to print trillions of new dollars to bail out the system, there will be no one to absorb them. That money will stay right here at home and trigger a hyperinflationary event that will make the 1970s look like a picnic. Michael Burry sees all of this, and he has made his move. He has converted his paper assets, his claims on a failing system, into the one asset that has been real money for 5,000 years, the one asset that cannot be printed by a desperate central bank, the one asset that has no counterparty risk, gold. His purchase of the Sprott Physical Gold Trust is key. He didn't buy a paper ETF like GLD, which has been criticized for not having all the gold it claims to own. He bought FWICE, a closed-end fund that holds physical, allocated gold bars in a vault at the Royal Canadian Mint. It's as close as a hedge fund can get to owning the physical metal itself. He is taking no chances. He wants the real thing. This is the ultimate defensive move. It's a vote of no confidence in the entire paper-based financial system. He is not trying to get rich. He is trying to not become poor. He is preserving his wealth while the system around him burns. When the man who gets it right makes a move this drastic, you have to ask yourself, what does he know that you don't? He knows that the game is over. The debt is too large, the inflation is too sticky. The geopolitical will to support the dollar is gone. He knows that the coming crash won't be a repeat of 2008. It will be a currency event, a sovereign debt crisis, a complete reset of the financial system. And in that reset, the only thing that will matter is who holds the real assets. Who holds the gold? Michael Burry has made his choice. He has sold the illusion of wealth and bought the reality of it. The question is, will you? Let's delve deeper into the psychology of this trade. Burry is not just making a financial bet, he is making a philosophical statement. He is rejecting the very premise of modern finance, which is built on leverage, complexity, and faith in central bankers. His move into gold is a return to first principles. A return to a world where value is tangible, not theoretical. The scale of his short position against the market is breathtaking. He bought over $866 million worth of put options against the SPY and $739 million against the QQQ. This is not a hedge. This is a declaration of war on the market. He is betting that the entire edifice of the US stock market, led by the high-flying tech stocks, is about to come crashing down. He is positioning himself for a decline of a magnitude that most investors cannot even imagine. A decline that would wipe out trillions of dollars in perceived wealth. Why is he so confident? Because he sees the rot beneath the surface. He sees that the record profits of these mega-cap tech companies are not a sign of a healthy economy, but a symptom of a sick one. They are the beneficiaries of a system that has crushed small businesses, suppressed wages, and created a winner-take-all economy. He sees that the market's narrow leadership, the fact that only 7 stocks are responsible for all of the market's gains, is a classic sign of a late-stage bubble. It is the same pattern seen in 1999, right before the dot-com crash, and in 1972 with the Nifty 50 stocks, right before a brutal bear market. But the most crucial piece of the puzzle is the Federal Reserve. Burry knows that the Fed is trapped. They have painted themselves into a corner. For over a decade, their policy of zero interest rates and quantitative easing has created the largest asset bubble in human history. Now faced with persistent inflation, they have been forced to raise rates at the fastest pace in 40 years. But the system cannot handle it. The regional banking crisis earlier this year was the first tremor. It was a warning shot. The massive, unrealized losses on the balance sheets of the major banks are the next shoe to drop. The commercial real estate market is a slow-motion train wreck. The corporate debt market is a time bomb. Burry knows that the moment one of these dominoes falls, the Fed will pivot. They will abandon their fight against inflation and come riding to the rescue with a fire hose of newly printed money. They will have to. The alternative, allowing the system to cleanse itself through a deflationary collapse, is politically unthinkable. It would lead to a depression worse than the 1930s. So they will choose the only other option. They will sacrifice the currency. They will unleash an inflationary storm to save the debt-laden system. This is the endgame that Burry is positioning for. His short positions will pay off during the initial crash, the deflationary shock, and his gold position will protect him during the second phase, the hyperinflationary response from the central bank. It is a brilliant, two-stage trade that covers both sides of the coming chaos. It is a strategy designed not just to survive, but to profit from the end of the current monetary regime. When you understand this, you understand why he sold everything. He is not just bearish on a few stocks, he is bearish on the dollar itself. He is bearish on the ability of the Federal Reserve to navigate this crisis. He is bearish on the entire post-1971 experiment of a global financial system based on an unbacked fiat currency. He is trading in his paper chips for the only real money in the casino. This is the big, fat pitch he has been waiting for. It is the culmination of all the patterns he has been observing for the past 15 years. The debt, the denial, the geopolitical shift. It is all coming to a head. And Michael Burry, the man who saw it all coming last time, is telling you in the clearest possible terms to get out of the way. He has built his ark. The flood is coming. This is the key takeaway. Burry's strategy is a masterclass in asymmetric risk-taking. He is positioning himself for an event that the mainstream considers a low-probability, high-impact black swan. But Burry sees it as a near certainty. By shorting the market, he risks a relatively small amount for a potentially astronomical payoff in a crash. By buying gold, he is not seeking a return on his capital, but a return of his capital in a world where all paper assets are repriced. It is the ultimate expression of financial foresight and intellectual courage. He is not just predicting the storm, he is building a fortress to withstand it and a weapon to profit from it. The message could not be clearer. The time for incremental adjustments is over. The time for radical action is now. This is not just an investment strategy, it is a survival strategy. Burry is not trying to beat the market, he is trying to exit it. He recognizes that in a world of unprecedented debt and monetary debasement, the only winning move is not to play. The traditional 60-40 portfolio of stocks and bonds is dead. It is a relic of a bygone era. In the new paradigm, the only portfolio that makes sense is one that is heavily weighted towards real assets, assets that cannot be printed, hacked, or legislated out of existence. Assets like gold. This is the lesson that the mainstream financial media will never teach you. They are paid to keep you in the system, to keep you buying their products, to keep you feeding the machine. They will tell you that gold is a pet rock, a barbarous relic. They will tell you that you are suffering from recency bias, that the market always comes back. But they will not tell you that the fundamental rules of the game have changed. They will not tell you that the system itself is on the brink of failure. They will not tell you that the man who saw it all coming last time is now betting everything on the collapse of the very system they are paid to promote. The choice is yours. You can listen to the cheerleaders on Wall Street, or you can listen to the lookout in the crow's nest. Michael Burry is screaming that there is an iceberg dead ahead. It is time to get off the ship, to the lifeboat. It is time to buy gold. It is to get out of the system before the system gets you.